All right. So today is obviously Sunday, and what I'll be doing is I'll be going over all the setups that took place for the last week from 22nd of May up until the 26th of May. And the last week we did see quite a few setups, so it was a rather productive week. So what I'll be doing is I'll be going over um, every single day, the pros as well as the cons. So starting with, of course, Monday, the 22nd of May. Now, going into the trading day on Monday, so I'm just going to, again, just do a bar replay just against Monday. So going into the trading day on Monday, we can see that the daily levels, obviously at the time, would have been this initial high being the next draw on buy side, and of course, this initial low being the next draw on sell side. Now, the bias was still bearish. The reason being is because this was considered as a bearish reset. So we had 2 sessions of drop, and I was anticipating further bearish continuation to the downside. So it's a pretty straightforward bias on the daily time frame, so no ambiguities, very clear. On the 4-hour time frame, so again, just going to forward play this to just before the European Open. So we can see that the next draw on buy side liquidity in on this specific trading day. If I just move this to the left, 1 second. Let's just make sure this is accurate as possible. All right, so the next draw on buy side liquidity on the 4-hour time frame was obviously going to be this swing, this initial swing high right here. Okay, so I'm just going to just adjust this slightly. And the next draw on sell side liquidity is this initial swing low down here, which you can see that golden line is drawn against. Now, if we go down to the 1-hour time frame, so again, just to forward play this just to before the European Open, so 2 a.m., we can see the next draw on buy side liquidity is this initial swing high. And of course, the next draw on sell side liquidity is this low down here. Okay. Now going on to, so it's very straightforward, obviously very clear levels. Now, in terms of of course, the 1-hour bias, right? We can see that price is obviously given this initial expansion, secondary expansion, and all of this can be considered to be contraction within the second expansive cycle. Now, going to the 4-hour time frame, we can see very clearly the price is given this initial high, secondary high. So we could either anticipate, because obviously the daily is bearish, so we can anticipate a bearish reset to the downside, or just one more expansive push to the upside. Now, if we go down to the 15 minutes time frame, now it's pretty clear here that, of course, that we've seen that the Asian range was very definitive. So what I'm going to do is I'm just going to just redraw the European Open and London Open lines. 1 and then 2, go. And go, and London Open. So we can see that, of course, just before the European Open, we've had this initial Asian range. Price is giving us a bearish break outside of our Asian range, okay? So the initial setup for this very trading day was going to be a break retest continuation to the downside, or a break retest reversal to the upside. So those are the either or scenario that one could have anticipated. So the area of interest, so in this kind of scenarios, these scenarios are incredibly straightforward, because your only area of interest is for price to trade into this bearish order block. So until price trades into the bearish order block, there's pretty much no setup, right? Or no opportunity to engage in any trades. I'm just going to get rid of these, so there's no confusion. So obviously what we can see is that price, just in the London Open, just continue giving bearishness. So again, until price trades into the bearish order block, there is absolutely no opportunity to engage. So we just simply have to wait for price to do so. So again, price obviously took out the H1 SST, right? Accumulated for a bit. Now, with BRR scenarios or BRC scenarios, one stipulation that I recently made with these kind of scenarios where price fails to trade. So obviously our trade cutoff time is at 7 a.m., right? So sorry, at 6 a.m. New York time, or in London, it's around 11 a.m. UK time. So that's the trade cutoff time. So The initial rule was that, of course, price doesn't give any setup before that time, then there's no trade. But with BRCs, what I found is that a lot of the time, if price trades away from the order block in London, there is a likelihood that if there's a conditional statement, right? So if price was to retest that order block in New York session, then there is a very high likelihood of price giving a bearish continuation to the downside. So as a result of that, what I've said is it's okay to wait. So in the case that price does retest the bearish order block, one should definitely look into setting a price alert, right? And of course, once your price alert is in place, you should definitely keep an eye out to see if price obviously was to give you some sort of an entry confirmation. So we did get an entry confirmation. We did get the initial entry confirmation being this break of market structure, right? Right, so we've got this break of market structure, obviously this being a classical break of market structure. So obviously one should have positioned their stop loss 5 pips above the high. Okay, now I'm just going to, again, just replay this to just there, right? So you can see exactly what's going on. Right, so obviously this candle leaves equal lows. The next candle gives that break of market structure and obviously closes below this point, which is the breaker. So of course, our area of interest for execution is going to be at the breaker. So obviously what we do is we go short midpoint of the breaker and stop loss goes 5 pips above the recent high. And of course, the initial profit target is going to be the recent low, which is all the way down here. So that's T1 and of course T2. So obviously with BRC scenarios, you aim for the recent low. Actually, no, I do apologize. So T1, because another thing to be aware of as well. So if you are going to be taking a trade in London, in New York, you should aim for the London profit level. So the first initial area, although price has traded through the H1 SST, you should still aim to take your first batch of profit at the H1 SST. And then the second profit can be the recent low. So this is actually incredibly important when it comes to profit taking. So if you do take a BRC trade in New York, it is vitally important that you do take your initial profit. So even if price is traded below the H1 SST or the H4 SST, you should ensure that you are still setting your profit target to these levels during the New York trading session. So essentially what happened in this day, so price obviously came up into area of entry and then obviously proceeded to give a purge above this initial high. Now at this point, you could have either called it a day or because this is a purge of this recent high. So actually what defines it as a purge? Well, for one, aggressive price action, trading above the high, and then immediately price trading back into the range. Now, the way that I would personally trade purges is as soon as price, so I would utilize the 13 EMA, as soon as price closes back into the range, as well as closing back below the 13 EMA. So actually what I'll do is I'll just add the 13 EMA on here so you guys can see what I'm talking about. So just moving EMA, MA, moving averages. Just add a second one. 1 second. Actually, no. So this one I don't need. So this one I'm just going to delete. So delete that. And then this one, I'm just going to set this. So I already have one. So I'm going to set EMA2 to 13. And then the style, so I'm going to make EMA2 visible. And of course, the color for 13 is typically red. And yep, there we go. So I'm just going to have the 13 on there so you can see exactly what I mean. So in this case, as soon as price snaps back into the range and closes below the 13 EMA, you can actually trigger immediately a market order. Your stop loss, so again, you should be watching this in real time. So your stop loss should still go 5 pips above the new high. So obviously price sort of created a new high after snapping back into the range. So you should position that stop loss 5 pips above the new high. So you have to be incredibly fast with your calculations. And your first profit target will go, of course, in the same places. So TP1 would go at the retest of the H1 SST. and TP2 would obviously go at the recent low. So again, this would have been a re-entry opportunity on Monday. And essentially what happened is obviously after that re-entry would have been triggered, price ran, took out the H1 SST, right? And then ran towards the recent low and eventually took out the recent low as well, okay? So this was on, of course, on Monday. Now let's go into Tuesday. So again, what I'm going to do is just going to adjust these levels. So obviously going into Tuesday, we've seen that price on Monday had given us that bearish session of drop. Daily levels were still the same. Bias is still bearish. So, you know, it's not really not much to change there. Again, just going into the H4 time frame. So 1, 2. We can see that again, price hasn't really given us any definitiveness of a bearish reset, because obviously that would come in the form of a break of market structure to the downside. So bias on this could still anticipate a bullishness to take out this recent high, or potential bearishness that would give us a break of structure in some way. So at the moment, the bias on the 4-hour should still be considered bullish. Now, the next drawn buy side liquidity was the swing high, and the next drawn sell side liquidity is the swing low down here. Now, if we go down to the 1-hour time frame, it's pretty much the same thing. So just before the New York Open, and again, just going to move these two lines across. We can see that next drawn buy side is the swing high, next drawn sell side is the swing low down here. Simple as that. What I'm going to do actually, because I don't need the 13 EMA constantly, I'm just going to make that invisible. And then if we go down to the 15 minutes time frame, oh, one thing to note on the 1 hour, we've seen that price has given us this initial low, contracted, and then giving us a break of market structure with an imbalance. So there's a secondary break. Price traded into the imbalance. And now what we can anticipate is for price to do what? To trade into these equal lows. So bias is still overwhelmed. It's predominantly bearish. So if we take a look at the 15 minutes time frame, what we can see is that price obviously created its initial range in Asia. So Asia has been predominantly accumulatory. And then just before the London Open, what we can see is that price had traded and broken, giving us a bearish break. So this is a bearish break outside of the Asian range, okay? And then traded to retest. So just going to pull this over. So price then traded to retest this bearish order block. So obviously what we're anticipating is that AOI in this case is going to be this bearish order block. Why? Because our bias is bearish on the higher time frame, but at the same time price is giving us a break outside of the range in the Asian session. European prices traded to retest the Asian range, so to retest the bearish order block, right? And therefore what we're looking for London Open is we're looking for a confirmation to go short. So if we go down to the 1 minute time frame, we can see this confirmation comes in a form of this. So let's take a look. So we can see that price. So what I always like to do in this case is okay, when we take a look, see this 800 EMA prices essentially hang it off the 800 EMA. We can see that European Open price is giving us a break of market structure right here. Okay. So this is a break of market structure. Right, and then price is obviously traded away from this area. Now, what kind of a break of structure it is this? This is a classical break with a breakup. So of course, because this is an unmitigated zone, price is coming up to mitigate against that zone just before the London Open. So it's important to always pay attention to little details like this. So of course, our AOI is going to be this area. So this is our breaker. Okay. So just before the London Open, we can see that boom, price gives a massive, massive bearish shift to the downside. So at this point, because of course you wouldn't normally, and I wouldn't normally just trigger a trade just like that. I would want to see some sort of a confirmation, such as price closing below the 13 EMA. I want to see again that it's a new break of market structure right here, something that I'll personally be interested in. But again, my general AOI is now going to be this breaker right here. This is my new AOI. Okay. So again, so you want to position your entry opportunity at the breaker, midpoint of the breaker, with stop going 5 pips above the high. Okay. Now, where is your first target going to be? Well, considering that in this case, obviously price we should be aiming to go to that recent low, but our R to R to the recent low is a less than a 1 to 2, okay? In this case, I personally wouldn't go for that recent low because again, remember our target is going to be this equal lows down here, right? So we have a very clear target because the 1 hour is giving us a bearish break of market structure. So we know that not with 100% certainty, but we can ascertain that price is most likely going to take trade to this low. So again, if you're aiming to go to the recent low, which is yesterday's low, we can't get a 1 to 2, then you simply do not have a setup. So this is one of the reasons why I didn't see anything on here. But on Tuesday, price didn't really give any qualifiable setup because if you'd enter at the break of stop goes 5 pips above the high, you get less than a 1 to 2 to the recent low and less than a 1 to 2 to the H1 as well as the H for SST. So in this case, right, in this case, what I would usually consider is the possibility of a BRR 1 minute. So what that means is I'll be anticipating once price takes out these lows, a potential 1 minute reversal to the upside. Now, price obviously trades below H4 and H1 SST, right? And then proceeds to obviously accumulate and then just before eventually just dropping and dropping and dropping and dropping. And then later on, so for me, the predominant setup would have been a short, right? And then just before the end of the session, of our trading session, obviously price trades into that key crucial daily sell side target, which happened at around sort of before the 6:30, which is 30 minutes after the close of our trading hours. Now, at this time, because I was still sort of open to the idea of a potential reversal, I actually still entertained the possibility of a reversal after price took out the daily SST. So I was keeping an eye on price, and as you can see, I still had sort of this this marker here. So what I initially saw was, okay, price traded into a high volume area. So I saw this as a potential break of market structure, classical break of market structure, right? And then I was like, okay, in this case, entry should go, so long entry position at the last down close candle. And of course, stop loss going 5 pips below the low. Now, the first profit target for me was the retest of this H1 and H4 SST because price had traded very aggressively below it. And it's also very close to the 800 EMA, okay? Because again, 800 EMA is it's acting as an area. So you can see that constantly price is rejecting the 800. So this is acting as a dynamic area of resistance. So this was basically what I saw on Tuesday, and I took this position on Tuesday because I did see a potential possibility of a reversal, albeit not a full reversal all the way to the high of the range. At the least likelihood, I did see a reversal for price to retest the H1 and H4 SST. And we can see that price obviously traded to retest this area as well as obviously trading into that crucial 800 EMA in the New York Open. Now, eventually, price obviously gave a full reversal. So, for me personally, I was quiet because price had been falling for the whole day. So I was like, what's the likelihood of price giving a full reversal? Very low, but at least I can get a 1 to 2 to this area. So why not? But you could have also set a second profit target, for example, because remember, this is an unmitigated zone. So you could have aimed for price to essentially mitigate against this initial area by setting your second profit target there. All right, so that's a 1 to 5. You can see the price also traded into to mitigate against that bearish order block on the same day. So for me personally, this wasn't although this wasn't a break retest, it wasn't a classified condition for a break retest continuation because price left a massive unmitigated zone after shifting away from the order block in London Open, right? As well as obviously the risk reward to the recent low is less than a 1 to 2. So these two conditions for me are big indicators that price is potentially going to give a reversal later on in the session. Now, again, you would have needed to obviously be careful in terms of your confirmation for this reversal. Now, one of the biggest filters in this setup was definitely the TDI, right? And that was a very handy filter to have because after price took out this initial low, you could have easily interpreted this as a break of market structure and you would have been stopped out. and then price obviously traded into the daily low, and after price took out the daily low, it would have been, again, very easy to interpret this as a break of market structure, and again, you would have been stopped out. So these initial positions did not, for me, give that valid entry of a BMS, because price didn't give every single confirmation that I was looking for when it comes to an entry opportunity. So this was on Tuesday's trading session. So Tuesday was a BRR on a 1 minute time frame, although it would have been a tricky setup to have traded. So now let's go into Wednesday. So obviously on Tuesday, we've seen prices taking out these equal lows and obviously close back into the range. So we still do not have that third session of drop. So bearish is still the valid bias. So if we go into the 4-hour time frame, now again, it's just going to forward play this twice, okay, in just before the 1 a.m. candle. The next drawn buy side liquidity is obviously going to be the swing high. The next drawn sell side is the swing low down here on this specific time frame. We can see now very clearly that obviously price is giving this initial low and it broke below it, leaving an imbalance. So this is now a secondary break of market structure. So on the 4-hour time frame, it's very clear that we're now in a reset circumstance, and therefore a bearish continuation is imminent. So we now have a very clear bias of what's going on here. Now, taking a look at a 1-hour time frame, again, just before the London Open, right, we can see very clearly that price is obviously, so if we start looking at this high, prices retested this bearish order block and then proceeded to give that third push to the downside. So we've seen a complete bearish cycle. On the 1-hour time frame, price is in a bullish reversal phase. So we're seeing prices giving this initial expansion, contracted, and is now in the process of giving us a second bullish expansion to the upside. Okay. Now, if we take a look at the 15 minutes time frame, so we can see the Asian range is obviously this initial range right here. We can see that obviously A, B, and C. We can see that just before the European Open, price has broken, giving us a bullish break outside of the Asian range. Right, we can see obviously where the H1 SST is this imbalance, and then the H1 BST is this initial swing high. Right, so very clear levels. We've seen a bullish break outside of the Asian range. Right, so now the question is, what can we anticipate in London? Well, just before the London Open, right, we can see. Okay, it's just going to remove these because again, these can be quite confusing. So I'm just going to just get rid of these so we can see properly. So just before the London Open, right, we can see that price is now traded, giving us that second push into the 800 EMA on the 15 minutes. We can see that price is obviously taking out yesterday's high, right? We remember this is a 4-hour bearish cycle, so price is obviously trading into that imbalance, trading into a short-term high. So 4-hour is still bearish, but 1 hour is giving us a bullish reversal. But obviously, in line of the 4-hour, we can anticipate a bearish continuation on the 1 hour. Not only that, but we've seen that price has given us a bullish break outside of the Asian range. So our initial AOI is going to be this bullish order block, right? So therefore, until price interacts with this order block, we do not have a setup. So London Open, what does price do? Price trades into the order block and closes firmly below it. So what is this? This is a 15 minutes break of market structure, but a 15 minutes break of market structure obviously took place right here. Right, because that's the swing low preceded the highest high. So therefore, the kind of setup this is a 15-minute break retest reversal with a breaker. So AOI is now going to be the breaker right here. This is now a new AOI. Now, because this is obviously an AOI, we need to wait for price to trade into the breaker. So we'll go down to the 1 minute time frame. And what we're going to be looking for in the 1 minute time frame is an entry confirmation from the breaker itself. So obviously price interacts with the breaker, pulls away. So this is the highest high, price gives a low high, pulls away, trades back. But again, all of this is a cumulative of activity. There is no clear break of market structure. It's only when price now comes down, obviously trades below this low, it looks again, because remember our intermediate low is right here. Okay, so obviously price trades and breaks below that intermediate low, giving us now what is known as a secondary break of market structure. So obviously with this being a secondary break of market structure, AOI is going to be this imbalance. Stop loss is going to go 5 pips above the recent high. Okay. So entry confirmation is, so the entry opportunity is going to take place at the imbalance with a stop going 5 pips above the recent high. And then, of course, the first area to take profit would obviously be the daily SST. All right, so just going to adjust this ever so slightly. All right, so we have the daily SST, which is the low that obviously price took out yesterday. So would needed to have actually adjusted this because now the daily SST is now different. So just ignore this line for now. The next drawn liquidity would be the low of the 4-hour range. So the low of the 4-hour range is the same as the H4 SST. So just to adjust that ever so slightly. So this is the next reasonable draw on liquidity. Again, this is a 15 minutes break of market structure with price retesting that 15 minutes breaker. So what we're anticipating is a continuation of the 4-hour bearish cycle to the obviously recent low. Okay. So what we can see now, obviously price what it did, it broke away initially, and then it traded back into the area of entry, which is at the imbalance. And then I remember price accumulating for a bit before eventually giving a very, very nice shift away from the 15 minutes breaker and obviously trading into that H4 SST target, right? So this was again, very straightforward trade. This is a 15 minutes break retest continuation to the downside, right? So 15 minutes break retest reversal to the downside. It doesn't always happen, right? But some of the clear confirmations for 15 minutes BRR is the London Open. It's the timing element of it, which usually takes place at the start of the session. You have this aggressive break of market structure on the 15 minutes, and the vast majority of the time, price would create a breakout because price would close below the swing points responsible for that break. So this was the setup that took place on Wednesday. So let's go into Thursday now. So what I'm going to do, because I forgot to adjust my daily levels, because now, of course, we've seen that price gave a firm bearish close on Wednesday's trading session. So we now have that third session of drop. Our new daily, obviously, target is going to be this initial low. Where price is super close to a daily target, we can anticipate that price is likely going to take out the low of its target, right? So obviously the next draw on daily liquidity is going to be this initial swing low. The next draw on buy side liquidity on the daily is going to be the swing high up here, okay? Now, if we're going out to the 4-hour time frame, so just going to forward play this just before the open of the session. So the H for SST is this imbalance right here. So that's what I've drawn the box based on. So it's the imbalance right here. And the next draw on H for BST is going to be the same swing high up there. Okay, so again, very straightforward levels. We're obviously seeing a price, again, it's the first expansion, secondary expansion, price took out the recent high and then gave that third bearish cycle. So we are within a third bearish expansive phase. At the moment, yes, a reversal is imminent, but price hasn't yet given us an indication that it wants to reverse quite yet. So if we go into the 1-hour time frame, what we can see is obviously, so just forward play this once. All right, so it's the European Open, so let's delete that. Right, so we can see that just before the European Open, you can see the next draw on sell side is the swing low, next draw on buy side is this imbalance. We can also see that price from this recent high has given us, and this is why I like to leave these levels there because it's really, really beautiful and really clear how you can obviously see price obviously trading from sell side to buy side, and it's just so incredible. So you can see so clearly these structures when you actually leave these in place. So price goes from an area of sell side to an area of buy side, and then trades below it, breaks below it, retests this area of sell side before giving that bearish continuation again. So crisp, so clear. So what we've seen obviously is that price is obviously traded into an area of sell side liquidity. Okay, and obviously below these lows, and we now have a new area of sell side, which is a buy side, which is this imbalance that was left after price broke below this low. Now we have a new area of sell side, which is this swing low down here. Now, if we go down to the 15 minutes time frame, we can obviously see our Asian range. Again, it's not a very definitive range as earlier in the week, but it's there. We have points A, we have points B, point C. So price obviously gives us a bullish break outside of this range because just before the London Open, right, what can we see? We can see the price is broken outside of the Asian range. Price has retested our bullish order block, right? And then price has now traded away from our order block into the daily SST. So At this point, what we're interested in is obviously we're looking to trade the reversal, because if you see a break retest continuation just before the London Open, then you always must anticipate the next logical move, which is the reversal move. Okay. So I'm just going to show you exactly what happens. I'm just going to delete those things for now. Okay. So we've seen obviously this in this. So I mean, this was a rower track back into the range. So I do apologize. So it's a rower track back into the range. We have this break, which is the bullish break right here, and then price trades into our bullish order block. Now, I remember this, the first initial move that I tried to look for in this case was, of course, a BRC bullish continuation. So I waited for a break of market structure, which happened. Okay, this is a classical break of market structure. And then what I did is I positioned my stop 5 pips below the low. Of course, and then entry opportunity. So long position would have been at, so because this was a classical break of market structure. So the last down close candle was my area of interest. Stop goes 5 pips below the low. And then I did set my initial profit target to be the recent high. And my secondary profit target I set as the prior high. So you can already see up here, there was a prior high that I had highlighted, and that's what I set as my TP2. Now, essentially what happened, price essentially traded away from the area without triggering the entry opportunity. Now, this is an important criteria, because if price leaves an unmitigated zone in a scenario that should have been a BRC, then it's usually an indication of a potential BRR that's going to form, meaning that what we should now be interested in this case, is for price to essentially complete that bullish move, and we're looking to then trade the reversal at the end of that bullish move. So price basically gave a continuation, and it just kept on rallying before eventually hitting. So we had obviously this retest of the bullish order block. Price gave this initial expansion and contracted, and then gave the secondary expansion and contracted, and then gave the third expansion, so initial high, higher high, and then proceeded to give us a reversal. Now, I didn't personally, because price essentially missed my initial entry. I didn't initially trade the reversal of this. I didn't initially see this as a BRR1, but in hindsight, if I was obviously looking at this from the perspective of a BRR1, because price left an unmitigated zone and didn't trigger my entry, right, then what I should have been doing is I should have obviously waited for price to not only have taken out the recent high, but obviously traded into a high volume area. And then what I'll be looking for is a 1 minute break of market structure. Now, this is an important structure because obviously price takes out this high and then trades below these initial low. You can see this is a secondary break. But I remember looking at this at the time, price wasn't in TDI extreme. So this is not something that would have been a valid entry. And then price gave this secondary push shift to the upside. And again, so this aggressiveness pushed price into the TDI extreme. And then it obviously gave what could have been perceived as a break of market structure, right? With so this is a secondary break of market structure with an imbalance, right? So what you could have done is, again, let's say that I traded this as a BRR 1 minute, could have entered this as a secondary break of market structure with my stop going 5 pips above the high. Okay. And then what would have happened, of course, is a short position there, and then of course, stop 5 pips above the high. And then I will have positioned my first initial profit target at the order block. And then the second target would have been positioned at the low of the range. Okay. So what would have happened is, of course, price would have come out, triggered a stop, but then I'll have noticed that this is obviously a purge of the recent high. So remember what I said earlier, in purge scenarios where price purges above the high by more than 5 pips, all you simply need to do is wait for price to trade immediately and close back below the 13 EMA. And as soon as you see price goes back into the 13 EMA, you should be ready to give a market execution with stop going 5 pips above the new high. It's incredibly important that it goes above the new high, not the previous high. And then you position, you still adjust your profit level. So first would be the bullish order block, and the second would obviously be the low of the Asian range, right? So this would have been the adjusted profit levels, and obviously price would have then proceeded to give a nice shift reversal away from these levels in the New York session. And you will have had the first target hit at the bullish order block, and eventually the second target hit at the H1 SST, and price eventually filled the low of the H4 imbalance, right? So remember that happening just before FOMC. Yeah, because we had FOMC also later on in that day. So this is a nice setup to actually learn from, because obviously sometimes it takes 2 attempts to get the right trade. But in the case where you do see a BRC, right, and price fails to trigger your entry, do keep an eye open for a potential break, retest, reversal. And if your first entry fails, always be keeping an open mind for a potential. If this is a purge where price aggressively trades above this initial high, then immediately as soon as you get up close below the 13 EMA, you should be ready to re-enter your position again. So that was on Thursday. So now let's go into Friday. So going into Friday, we've seen the prices obviously giving us 3 sessions of drop plus an extensive session of drop below this daily sell side target. So at this point, because we're now in that extension of that bearish cycle, we can anticipate some sort of a bullish reversal again, end of the week. So it's likely bullish reversals will take place at this time of the week. But at the same time, one should also keep an open mind for potential continuation towards this next daily SST. Now, on the 4-hour time frame, we can see very clearly that price has obviously delivered a very nice. So we've seen this bearish cycle, number 1, number 2, and then obviously takes out the recent high, and then number 3. All of this is that extension of that third leg. Price is giving this initial low, contracted, and is now delivering a lower low. So if I just forward play this twice into the just before the European Open, you can see the next draw on the sell side is this low. The next draw on buy side is the swing high. If we go into the 1-hour time frame, we can see very clearly again the next draw on the sell side. So just going to forward play this just before the European Open. The next draw on sell side is this imbalance, and the next draw on buy side is this swing high up here. If I go into the 15 minutes time frame, we can see obviously price has been accumulating within this range. We can see the price is giving us a bullish break with this bullish order block present. So if you just forward play this twice into just before the London Open, again, we can see the price is giving us a break outside of the Asian range, retest of the bullish order block, and is now trading away from that. Now, in this case, the one criteria that hasn't been met is that price needs to take out either the SST or the BST for the H1. Until that happens, we do not have a setup. But obviously, if price is giving us a break retest and is giving us a continuation in London, then we can anticipate a bearish reversal. So it's pretty much what happened. So as price traded into the H1 as well as the H4 SST, right, we did get a 1-minute break of market structure to the downside, right? So just show you exactly what happened. So this is the initial opportunity. Price gave a 1-minute break of market structure to the downside, right? And then of course, this is a classical break of market structure. So AOI should have been to enter at the last up close candle. We stopped going 5 pips above the high. All right, and then of course, there you go. Now, 2 profit targets to have aimed for. The first profit target you could have aimed for is the 800 EMA, but confluence with the 800 EMA personally was a retest of the bullish order block. And the second profit target is the H1 SST, just below the low of the Asian range. So you could have aimed for the start of the imbalance, or you could have aimed for the fill of the imbalance. Now, again, what happened is very typical of what price has been doing for the week. Price purged the recent high. So again, after a purge of the recent high, what you do is you wait for price to trade back into the range, immediately closing back into the 13 EMA, you re-enter your position, right? Stop loss must go above the new high. It's vitally important, right? And then, of course, your first target and your second target should still be the same. So it should still be the order block, and it should still be the H1 SST. So essentially what happens, price trades into, so we would have been in this trade anyways at the close of the 13 EMA. And the price eventually, just before the red news event, the durable goods order in New York session, price rallied to the downside, came up to retest, and then just kept on falling into the Michigan sentiments final. And of course, the first target was hit at the order block, and the second target was hit at the H1 SST. So that was Friday's setup. So if I just give you the general weekly overview, right, we can see that every single day there was at least one opportunity. The only day personally, I think that would have been a very tricky day to have traded, and I personally missed the setup on this day was on Tuesday, right? But Wednesday was a very clear break retest continuation, no, break retest reversal to the downside because price gave a bullish break before giving that bearish reversal that broke structure on the 15 minutes time frame. So this, I think, by far was the easiest setup to have taken. And then, of course, Monday, we had in New York, the retest of the bearish order block, and then a continuation to the downside. And then, of course, price on Thursday gave us a break retest, took out the recent high. This was personally a tricky one as well because this is a BRR 1 minute, took out the recent high and then proceeded to give us a bearish reversal into the H4 SST. And then on Friday, this is a very easy setup, but one would have needed to have a lot of patience because it was just before a red news event. So this is a red news trade where price gave a break retest continuation to H1 and H4 SST before giving us that bearish reversal to the downside. So I hope you found this session very helpful. I do advise for yourself, look over the week that's just gone back, see what setups you've missed, what setups you took, and what you could have done better to have had a much better week. And I do wish that you have a great trading week ahead. All the best.